Evening and welcome to today's session. So today we will be continuing tax audit and Form 3CD with rest of the clauses. Before I proceed, anyone has any doubts with respect to any of the topic that we have discussed yesterday? Any doubt? Any of the doubt with respect to the tax audit that we have discussed yesterday? Okay. If you have any doubts, you can post it. Okay. And accordingly, I'll be taking up the doubt. So let's proceed. So we discussed till clause number 14A, 14B in the last session. Okay. Now we need to discuss again, discuss further. I hope you guys have gone through that particular clauses till now, which are very important. Okay. Now coming to the next clause, which is clause number 15, okay, of Form 3CD. What clause 15 says? Clause 15 talks about giving the following particulars. Give the following particulars of the of capital asset converted into stock in trade. Okay, we are required to give particulars of capital asset converted into stock in trade in a format way. Okay, which requires description of capital asset, date of acquisition, cost of acquisition, amount at which the asset is converted into stock in trade. Okay, a pretty simple clause. Here we are required to provide details with respect to the conversion of capital asset into stock in trade. Okay. Now, you already have section 45(2) of Income Tax Act, which deals with the conversion of capital asset into stock in trade deemed to be transfer in. It is basically known as a deemed to be transfer of the previous year in which the conversion took place. Okay. There are other provisions also which governs this particular transfer. So, with respect to that, let's write clause 15. Conversion of capital asset into stock in trade. Okay. Now, the way we are required to provide the details here is that we need to give what was what was the description of the capital asset, date of acquisition, cost of acquisition, and amount at which the asset is converted into stock in trade. Okay. So, kind of a tabular format which is usually given, which is description of capital asset. Okay. Then you have a date of basically conversion or date of acquisition, cost of acquisition, and amount at which it is converted. Date of acquisition, cost of acquisition, and amount at which it is converted. So, amount of conversion. Okay. So, in the tabular format, usually we provide this detail with respect to the capital asset which are converted into stock in trade. Okay. Now, the question comes is, like we have already seen, like you guys have already seen, okay, section 45(2), which deals with the conversion of capital asset into stock in trade deemed to be transfer of the previous year in which the conversion has taken place. Okay. Then there's a proviso to section 47(4) and 47(5), which deals with the transfer of the capital asset by holding companies to subsidiary or vice versa. Okay. And not considered the transfer by the virtue of 4 and 5 of section 47 if the conditions specified thereunder are satisfied. Okay. Then there is 47A, where the transfer of a capital asset by holding company to its subsidiary or vice versa are not to be considered by transfer by virtue of 4 and 5 of section 47 again. But such capital transfer is capital asset is converted into stock in trade within 8 years from the date of such transfer. Okay. And such capital gain would be deemed to be capital gain of the previous year in which such transfer has taken place. So all these things, based on all these things, all these sections, we need to understand, okay, what capital asset has been converted into stock in trade and the amount at which the asset is converted into stock in trade. Now for that, how you will identify which asset has been converted. Okay. So for this purpose, okay, the particulars which are required to be stated under this particular clause should be furnished with respect to the previous year in which the conversion has taken place. Okay, or the conversion was done. So I'm here, the date of conversion should be into the previous year. Conversion in previous year, relevant to the assessment year for which the tax audit is being done. Okay. Now the clause doesn't require the details regarding the taxability of the conversion. Again, I am not here discussing the taxability. I'm just discussing the details of the conversion. Here, we are not required to disclose any taxability of the capital gains or business income arising from the deemed transfer. No. So, no taxability is discussed over here. No taxability is discussed for, for deemed conversion or of capital gain. We are just specifying the details of the conversion. For that, you need to go to the, capital account registers, basically fixed asset register for the audit point of view. That, okay, FA register and specifically disposals and transfers in FA register will give you the details with respect to the cost capital asset which is converted into stock in trade. Okay, from there, from the disposals and transfers, you can identify is there any conversion that has taken place. Plus, the date is important to determine whether the asset is long-term capital asset or short-term capital asset. So, the correct date is necessary to to identify for the conversion, because these are the internal records, these are the things which are happening internally. So ascertaining the date of conversion is critical, and for that you need to obtain all the relevant documents, all the relevant details wherein with respect to the conversion. For examples, approvals that may have been obtained for the conversion, okay, policy compliance which might be there in a particular company, okay, or any minutes are there to verify the conversion. Okay. Now, another point here is the cost of acquisition. Again, the cost of acquisition should be the original cost of acquisition. Now, from the audit point of view, we are required to report original cost of acquisition, not WDV. Again, original cost of acquisition is required to be reported, not the WDV. The amount recorded in the books at which the asset is converted into stock in trade should be stated, and such amount may not be the fair market value as on date of conversion. Okay, maybe some other value. So amount of conversion will be the amount which is, at which the conversion has taken place, and you have recognized your stock in trade for that. But when I talk about cost of acquisition, it's the original cost that I am required to report, not the WDV. So for that, you need to obtain relevant documentation with respect to acquisition of, okay, capital asset. Then only you can identify cost of acquisition and date of acquisition. Okay. So that is with respect to clause number 15. There is one doubt, how to remember clause number, how to learn clause number. There are 44 clauses. See, there are not 44 clauses, there are 44 clauses plus sub clauses. Okay. If I talk about, let's say, clause 14A, 14B, there are multiple items. Now, how will you remember the number? Basically, by practice, you can remember the number. By practice, the more you will practice, the more you will remember the number. Okay. But having said that, uh, I would suggest, to understand conceptually what things are reported where. Understand conceptually rather than, focusing on, how to mug up the numbers clause wise. Focus on logical explanation, understanding of the clauses, the structure of the Form 3CD, and why these reporting requirements are there. Trust me, if you will try to understand from that point of view, numbers are, not that much a big problem. You will remember that. You will start remembering the numbers. And there are certain clauses, in Form 3CD, which in your practical scenario, practical life also, let's say, for example, in your articleship also, you will be dealing with those clauses. For example, on a regular basis. So let's say, for example, let's say you have one clause number 17. Okay. Land and building transferred with respect to during previous year for a consideration less than the adopted or assessable value. Okay. Or if I talk about 16, 16 is a pretty common one. Amount not related to profit and loss account being the following items. Okay. Or you have a 18, which is depreciation. Then apart from that, there are multiple clauses that we will discuss, but these are the clauses which are, usually, in a practical scenario also we deal with, and you use to report these clauses in tax audit. So that's why from that basis also you will start remembering the clauses. For example, this one, 31. 31A, 31B, 31BA, BB, BC, BD, okay, C, D, E, all these clauses, the whole 31 clause is basically based on section 269, SS, ST, T, all that stuff. So by this way, remembering the section, by practicing, by seeing the Form 3CD, working on the Form 3CD in real life at your articleship, you will start remembering the things. Don't worry on the clause part, clause number part, rather than focus on understanding what is the requirement of that particular clause. Okay. Devraj, can you just specify your tax credit or reverse charge from which particular chapter you are referring to? Or if you are referring from this particular chapter of tax audit, then which particular area you are referring to, clause or something like that? Any further doubt, guys? Any further doubt? Anita, with respect to 44 AD, you are asking the limit of 44 AD after amendment. So you want to know the limit which is prescribed in the eligible business definition. So with effect from 1/4/2024, the words of 2 CR, the limit of 2 CR, okay, will be called for 3 CR if provided the aggregates of the amount received during the previous year in cash does not exceed 5% of the total turnover of gross receipt. Okay. In that case, the 2 CR will become 3 CR. Otherwise, it is 2 CR. The definition of the eligible business. That amount should not exceed 2 CR. Any further doubt, guys? Any doubt? No? Then let's proceed further. Okay. Now we discussed clause 15. Let's go to the clause 16. Very important clause and very, I would say very common clause because whenever you go for, reporting under Form 3CD, you will definitely find something to report in this particular clause. So that is something, we say that's why I say very common clause. So what is clause 16? Clause 16 are the series of subclauses where you provide amounts not credited to profit and loss account. Okay. You report amounts that are not credited to profit and loss account. Now, under various subclauses for the clause 16, there are type of amounts that if they are not credited to the profit and loss account, then you report those. For example, first, items falling within the scope of section 28. Items falling within the scope of section 28. Okay. Can anyone tell me what is section 28 of Income Tax Act? What are the items that fall under the section 28 of the Income Tax Act? Anyone? Items which fall under section 28 of Income Tax Act? It's a basically charging section for PGBP. Okay. Profit and gains of business and profession. So numerous items are there. Now, if there is any such item which is falling under the scope of section 28 and you have not credited, okay, in P&L account, then that item is required to be reported over here. Now, the question comes is that how to identify these items? Okay, how to identify these items? I'll come with respect to other credit also. Let's discuss the other credits and then I will provide how to audit these. Second is this was A. The B is pro forma credits. drawbacks, refunds of duties of custom, excise, and refunds of indirect tax, I will call it generic. Okay, which includes my custom, excise, service tax, refund of sales tax, value added tax, where such credit, duties, refunds are admitted as due by the concerned authorities. Okay, in that case, if you have received any such credit, okay, and that amount is not credited to the profit and loss account. C, that is escalation claims accepted during the year. If any such item is there with respect to the escalation claim, and if you are not credited to profit and loss account, then again that is required to be reported over here. D, that is any other item of income. Any other item of income. Now here, the term income is required to be understood with respect to income tax act. Okay, so any other item of income with respect to that. And E, capital receipt. Capital receipt, if any. Okay. Sorry. Okay. If that is also not credited to profit and loss account, it is not routed through profit and loss account, then that is required to be reported to them. Now, point comes is how to audit these items. Because now you understand, okay, what are these items, but how to identify and how to audit whatever is being reported in these particular clause. So, number one, item falling within the scope of section 28. Okay, means they are chargeable to, or they are required to be considered as an income from profit and gains from business and profession. In that case, you need to go through the items which are credited in balance sheet GLs. Okay, so if any credits are posted directly into balance sheet ledgers, basically. Okay, with respect to the nature of the items that fall under the section 28. From there, you can identify, yes, okay, this was supposed to be, routed through profit and loss account, but has not been credited to the profit and loss account. When I talk about refunds and duty drawbacks, okay, you need to check whether any duty drawback has been received, which is credited directly to, balance sheet ledgers. For example, you have outstanding dues or you have advance to be received from governmental authorities. Okay, the way you have disclosed in your balance sheet, basically, if is there any amount that you have shown payable or to be received from the governmental authorities or statutory authorities, and if you have some credits in that. Okay, so by verifying those credits in balance sheet ledgers pertaining to taxes, okay, due, or kind of, if you have paid more and if you have a balance credit available, something like that. Okay, so I'll say due or credit balances. Sorry, not credit. I'll say assets, as an asset. Then those credits are required to be seen if that is a refund of indirect taxes or pro forma credits or drawbacks, then yes, then that is required to be reported over here. Now, the critical point here is if you see the provision or the clause, it talks about pro forma credits, duty drawbacks, everything are admitted as due by the authorities concerned. Okay. Or refunds are admitted. It's not only we are talking about the received, we are talking about admitted. Okay. So credit or claims which have been admitted as due after the relevant previous year are not required to be reported over here. Okay. Accordingly, we need to determine when it was admitted by the concerned authorities. If it was admitted by the concerned authorities during the previous year, then we will report over here. If admitted by concerned authorities in previous year, then only consider. Otherwise, if it is not admitted by the concerned authorities in previous year, then you are not required to report that amount basically. Okay. Then you have a escalation claims. If these escalation claims are not credited to profit and loss account, rather directly admitted or netted off against any expenditure, or are whether netted off against any liability, okay, or any advance that was or any balance, data balance that was there. So if there are such claims, escalation claims pursuant to a contract, okay, which are entered into earlier years by the company, in that case, these escalation claims usually, form part of the amount receivable from that particular customer in that particular contract. Now, let's say, for example, I was supposed to receive 100 rupees. Now, because of the escalation claim, I am now going to receive 120. But instead of showing 20 rupees at my receivable and passing the next impact into the P&L, I may adjust against the cost that I'm going to incur. Or I may directly, pass the amount into my some other GL in the balance sheet. Okay. In that case, I need to identify, okay, uh, whether such claims have been, passed through any other GL rather than being crediting to the profit and loss account. So contract escalations not posted or routed through P&L. Okay. Now the question here, another point is that accepted, the term accepted, this term, accepted means unconditional acceptance. It should not be a disputed acceptance. Okay. Or any dispute should not be there with respect to the acceptance. So let's say, for example, I said, okay, 100 rupees was there. Now there is 20 rupees. I have, asked my customer to pay me as an escalation claim, but the dispute is going on. Should I report that 20 rupees as an escalation claim not credited to the profit and loss account? Answer is no. If the negotiations are going on, if things are under discussion, I will not report that as an escalation claim. Okay. And there is a very famous case law with respect to that. That is CIT versus Hindustan Housing and Land Development Trust Limited. Okay. Next item is with respect to any other item of income. Okay. Now you need to verify the records, the documents that is possible for you with respect to any other item of income. And accordingly, you need to report the details in Form 3CD. Now, for this purpose, again, you need to consider what income it is, and accordingly, you need to also see, also verify, or uh, you can say, also comply with requirements of AS9, that is revenue recognition, and or if it is the case of Ind AS, I will say Ind AS 115. So I need to also see the term income from the viewpoint of the accounting standards in order to determine whether it is an income or not. With respect to the capital receipt, now here we need to use our professional judgment as a tax auditor in determining whether a receipt is a capital receipt or a revenue receipt. Okay, capital receipt are not generally credited to the profit and loss account. Hence, we are required to take enough care to check out any transaction generating receipts of capital nature. Okay. Now, with respect to the information that we have available with us under clause A, D, and E, okay, we need to look into the entries which are passed in the books of accounts and made available to us. I need to check bank accounts thoroughly, cash books thoroughly to find out any credit, any income, but not credited to profit and loss account. Same for the capital receipt. I need to go and verify the bank statements, cash books, okay, any other ledger that is available, okay, with respect to amounts that are credited in balance sheet ledger being in capital nature. For example, fixed assets. Okay, if you have received any subsidy, if any, there is any, capital receipt of some other nature which is credited to any of the asset ledger. So accordingly, you need to check whether any amount has been credited or not. Okay. So that is with respect to clause 16, how you need to audit and how you need to identify these details. Okay. Now there is one query. What do we mean by admitted? Admitted means they have admitted that, okay, this particular, you know, pro forma credit drawback refund will be paid to you. So it has become due. That is mean admitted. Escalation claim means in a contract, what happens is, let's say, for example, I'm have a long-term contract for building a particular construction site, project, a building. Okay, I'm creating or I'm doing a construction project. Now, let's say it's a 4-year project. In the first year, I agreed all the things and every part of the contract, the amount that I will charge from the customer and everything. During the 4 years, let's say, for example, the prices of the material, raw material, let's say steel, that is being used in the construction or cement, increased tremendously. Now I had usually it's a part and it's a custom to have escalation clauses in your contract, wherein if a amount of some raw material increases to more than a certain extent, then that due to that particular increase in the amount of raw material or cost of raw material, you get or you can claim additional amount from the customer as a part of the escalation. Escalation means increase in the price of the raw material or some factors that are very critical to the project. Okay. As a result, if you have a escalation claim in front of your customer, you have put an escalation claim and that has been accepted unconditionally, means there is no condition with respect to the acceptance, there is no dispute, no negotiation, everything has been done and it has been accepted, that escalation claim is required to be reported. Devraj, can you just provide which particular actual rate you just want to understand? Devraj, can you explain what actual rate you want to understand over here? Any doubt, guys, till now? Any doubt? Any doubt? Okay. If no doubts, let's proceed further. So the next clause I want to discuss is clause 17. Okay. Where any land or building or both is transferred during the previous year for a consideration less than the value adopted or assessed or assessable by any authority of a state government referred under section 43 CA and 50C. In that case, you need to provide the details of the property, consideration received or accrued, value adopted or assessed or assessable, and whether the provisions of second proviso to subsection 1 of section 43 CA or for the proviso to clause 10 of subsection 2 of section 56 applicable or not. So, before we proceed, can anyone tell me what is section 43 CA and 50C? What they are about? What section 43 CA and 50C are about? Can anyone tell me that? Anyone? What that section is about? 43 CA and 50C. Okay. Basically, these sections talk about, value that is adopted, okay, or assessed by any authority in case of a transfer of a property. Okay. Kind we used to call as a stamp duty value. Okay. Now, if that particular scenario is applicable in the current case, let's say, for example, if a property which has been transferred where 43C or 50C is applicable, okay, value adopted under section 43CA and 50C. In that case, we are required to provide certain details over here. Now, basically, when I talk about 43CA, it's a special provision for full value of consideration of transfer of asset other than capital asset in certain scenarios. Okay. And if you see in that particular section, if where the consideration received or accruing as a result of transfer by any assessee, okay, being land, building, or both, is less than the value adopted or assessed or assessable by any state authority of a state government for the purpose of payment of stamp duty value. Okay. Now that value we are talking about here, that stamp duty value. And the clause says that, okay, where any land and building or both transferred during the previous year for a consideration less than that particular value. So value adopted is more than the amount of consideration of transfer. So the consideration is less and the value adopted is more. In that case, you need to provide certain details. That is, details of property, consideration received, and value adopted. Okay. Now here, these details can be, identified. Now, if I want to identify these details from the records, they are pretty much easy. I can easily do that from the fixed asset register. Okay. Is there any particular property which has been transferred? So for land, building, or both, I need to verify the consideration received versus the value adopted. Here, the triggering point to report is that the value adopted should be more, or basically the consideration, should be less than the value adopted. Okay. Now, as a tax auditor, we need to, consider the amount that is received or accrued both during the relevant previous year. So the consideration received, basically, although the term which is used here, consideration received. If you see, consideration received or accrued. Okay, the term is used received or accrued. So it's not only the amount which is credited in our bank accounts, but it is accrued also, which we were supposed we are is finalized, but we will receive in next year or in coming years. So from audit point of view, received plus accrued both are to be considered. Now, with respect to that, we need to obtain sale deeds to identify whether any sale has happened or not. If the sale has happened, then what was the value which was assessed by the authority of the state government. So sale deed can help you to identify that, or any agreement to sale is there. to identify whether the sale has happened or not, or any other records of similar nature. Okay. Now, if in any case, in any of the clause, like let's say for example, clause 16, clause 15, or clause 17, we are not able to receive any detail, we are not able to get any detail, we will qualify. And we will report in form 3CA and 3CB accordingly the observation or the qualification. Clear? So if you have received consideration less, okay, compared to the value which is assessed by or adopted by the authority of the state government, in that case only this clause will be triggered. So basically under 43CA, okay, if the value which is adopted or assessed by a state authority of the state government for the purpose of payment of stamp duty, so stamp duty value, and if your, basically your consideration is less than the stamp duty value in respect of such transfer, then although taxation part is different, we are not dealing with the taxation part over here. We are just dealing with the transaction. Okay. So the identification of the transaction is the triggering point is the stamp duty value or value assessed should be higher than the consideration. Here, I am not required to report on the taxation part. Again, I am not required to report on the taxation part. Clear? Now, the next clause that I want to discuss is clause 18 with respect to the depreciation. Depreciation of asset or block of asset. Okay. Very important clause. Now, what we are required to report here. So, if you see, what we are required to report is a description of block of asset, rate of depreciation, actual cost of WDV as the case may be, plus any adjustment made to written down value under section 115 BAC BAD. This was only applicable for the assessment year 21-22. So now this will not be applicable. Okay. Not that much relevant basically. Adjustment made to WDV of intangible asset due to excluding value of goodwill for business or profession. Okay. Again, that was specific one-time adjustment that was required to be done. Then you have adjusted written down value. After that, additions, deductions during the year with the dates. In the case of any addition of the asset, date put to use, including adjustment on account of standard credit, change in rate of exchange of currency, subsidy granted or reimbursement. Okay. So you need to provide additions or deductions with respect to adjustment of standard credit, exchange rate, and subsidy, then depreciation allowable and written down value at the end of year. And this is required to be provided at a block, either in respect of each asset or block of asset. Okay. Usually it is provided at the block of asset level rather than the each asset level. So in income tax, we classify the asset into various blocks. So based on those blocks, we do this particular kind of reporting. That is, how do you report this particular clause over in utility also, or in your tax audit report? Basically, you provide description of asset, then you provide rate of depreciation. What is the rate? You provide the actual written down actual cost of written down value. Okay. Actual cost or written down value. It's kind of, you can say, or it's not of. Okay, actual cost or written down value as a case may be. So whatever the it is applicable, you need to provide that. Now, then you need to provide additions, deductions. I will not, cover these three. Reason because they were one-time adjustments that were required to be done, are required to be done in 2021 because of these amendments. So most of the cases, all these adjustments are done. Now your actual cost or WDV, this H and this double C will be same. Okay. Generally, it should start from A, not from E, because there is some typo errors over here. So this is A, B, C, and this is double C. So this C and double C should be same nowadays. So we only write C. Okay. Then you have additions and deductions. Additions. Usually we bifurcate additions with respect to put to use date, basically. Okay. Like more than 180 days, less than 180 days, that stuff, we do the bifurcation. Same way we have deductions, okay, with respect to the assets. Now, again, these deductions can be form part, can be because of adjustments. Again, additions can be because of adjustments, okay. Then you have a depreciation, allowable, and the written down value at the end of year. Depreciation and WDV. So by this way, you prepare a summary of your depreciation details that is required to be reported in your Form 3C. And once you prepare this detail, or the assessee prepares this detail, you verify whether the details are appropriate or not. How? Based on the fixed asset records. So what you need to do is, number one, you need to check the FA records or registers maintained for income tax purpose. Maintained for income tax purpose. Okay. So if there is separate records or registered maintained for income tax purpose, then that particular detail is required to be verified. Then you can check these details from income tax return filed for the last year. So the closing WDV, okay, of last year should be the opening WDV of this year, basically cross-referencing with the last year details. Okay. Then the additions and deductions can be based on your books of accounts. Depreciation is just a recalculation, okay, that you can perform because you already have a rate over here. So you can recalculate this depreciation and you can get the WDV. So it's pretty much simple. There is nothing much complication in this. And if there are some specific cases where some, reliance on any judgment or any other thing is taken care of, or, because of which there is a deviation from the standard practice, or you have taken more addition or deduction, okay, for the special cases, the auditor should specify the full particulars of that particular case. Okay. Should specify the detailed description of scenario. When I say special cases, means you have taken additional depreciation, there is additional deduction, addition, something like that. So in those cases, you need to specify the detail appropriately. So this specimen copy of Form 3CD is taken from the income tax website. I will also upload after the lecture. Don't worry. Any doubt? Any doubt? If no, then clause 19. Clause 19 talks about amount admissible under these sections. So one, you are required to provide amount debited to the profit and loss account, and then amount admissible as per the provisions of Income Tax Act. Okay. And also fulfills any condition that are there with respect to these deductions. Okay. So if you, let's say for example, in certain cases, you get 150% of the deduction of the amount of expenditure. In that case, the 100% will be over here. Okay, 150% will be over here. So you need to provide amount admissible under these sections. So this is just an hypothetical example, but section by section, or subsection by subsection, you need to go through the deductions which are allowable. Okay, and on the basis of that, you need to check whether the conditions are satisfied or not to take the deduction under Income Tax Act, and if yes, then only the amount will be reported over here. So clause 19 talks about amounts admissible as deduction under certain sections. I'll not repeat the sections over here, but these are the certain sections. Now here the question comes is that is it is necessary that the amount should be debited to profit and loss account. See, here the term which is used in the form 3CD basically is amount debited to profit and loss account. What if I have not debited amount to the profit and loss account, still I'm getting the deduction? For example, section 33 AB and ABA. Okay, allow deduction in respect of amount deposited in a designated account for specified purpose. In that case, I have not debited amount to the profit and loss account, but still I will get the deduction. So, if because of the condition, because of the conditions, a deduction is allowable, okay, without debiting the amount to P&L, in that case, specify the same in detail. And if I give you an example, so the classic example will be section 33 AB and 33 ABA. So as a tax auditor, I need to check two things. As a tax auditor and a part of audit, I need to check number one, the amount that is admissible as a deduction, okay, under various section. Second, whether the conditions are complied with or not. Means various conditions are there to claim the deduction in these sections. So whether these conditions are complied with or not. And all these details are required to be obtained from assessee. You need to ask the details from the assessee from case to case basis, like whatever section it will be, whatever conditions it will be, you need to ask the details from assessee, and based on that you can then identify whether the conditions are complied with or not. Clear? Any doubt with respect to this clause 19? So it contains 32 AC, AD, AB, 33 AB, 33 ABA, 35, 1112, 12A, 13, 14, 35, 2AA, 2AB, 35 ABB, 35 AC, AD, CCA, CCB, triple C, double CD, then D, double D, double DA, and 35E. Specific sections for specific deductions. Now, coming to next clause, that is clause 20. Clause 20 talks about any sum paid to an employee as a bonus or commission for the services rendered where such sum was otherwise payable to him as a profit or dividend. Okay. So amount paid as to an employee as in bonus or commission. Okay. Which was otherwise payable to him as a profit or dividends. In that case, okay, we are required to report that particular amount. We are required to report the details of such amount that is paid to an employee as a bonus or commission for services rendered, which is with reference to the section 36(1)(2). So I need to obtain the list of eligible employee for bonus and commission for services rendered with the amount and the basis of calculation for bonus and commission. Then only I will be able to identify whether it was appropriately payable to that employee or not. So, list of employees with amount paid as bonus/commission. Now here I need calculation for bonus/commission amount. Like, okay, on what basis the calculation has been done? Okay, the basis of calculation. Based on that, I can define whether it was payable him to bonus or commission or otherwise payable. It was payable to him as a profits or dividend. Now that is 20A, clause 20A. We have a clause 20B, which talks about details of contribution received from employees for various funds referred in section 36(1)(5)(a). Okay. In that case, what I'm required to do is I need to provide the nature of the funds, some receipt from employees, due date for payment, the actual amount paid, and the actual date of payment to the concerned authorities. I need to provide this detail. So, details of contribution received from employees for various funds I referred into section 36(1)(5)(a). Here in this case, there are few things that I need to take care of. Okay. This clause is only about disclosure. Is only about disclosure, not allowability. So here I am not required to express whether this expenditure or this particular amount should be allowed as a deduction or expenditure. No, I am not talking about the allowability. I'm not here to express opinion about allowability. I'm here to disclose the facts which are there. So this is only about disclosure of facts, not allowability opinion. Okay. It's not about the allowability opinion. It's about the disclosure of the facts. So you already might have seen that section 36(1)(5)(a) permits deduction of any sum received by the assessee from any of his employees to which the provision of section 224(10) are applicable, if it is credited by the assessee to the account of the employees in the relevant statutory fund on or before the due date. Okay. So the deduction is only allowed if it is deposited on or before the due date. Okay. Where the provisions section 224(10) are applicable. So I am not required to report on the deduction allowability. I am just required to disclose the facts. That's it. This was section 36(1)(2). Okay. Now, how can I identify these things, the contribution received? So, for this purpose, I need to look into payroll records. Payroll records will help me to understand, okay, various contribution recovered from the employees which fall under this particular category. I should also refer to the challans for amount paid. So this will give me the detail when the amount was paid for which particular purpose. Or you can also identify, payroll returns. Basically, PF, PSIC, or all these, etc. returns, if are there, if they are applicable, okay, then we can go and verify these returns also. Also, you can check for the bank statement to verify the date of payments. You can verify the employee ledger to understand what amount was recovered and what amount has been paid. And if, for a company there you have a 10,000, 12,000 employees, it is very difficult to verify all the things. So in that case, you can perform sample test for, I would say, for huge transaction or voluminous transactions. Okay, so that was clause 20B. Any doubt? If I talk about maintaining books of accounts as per the income tax records and accounting, as per the accounting standards, see, in most of the cases, when we talk about Form 3CD, we are required to report as per the books of account which are normally maintained as per the GAAP, that is generally accepted accounting principles plus accounting standards or NDS. In some scenario, we report details which are relevant to the income tax. For example, ICDS, for example, depreciation. Okay. But otherwise, in the case of Form 3CD, we do not issue an opinion on the allowability, taxability, whether this amount should be allowed a deduction, whether this amount should be added back to the income. No. We only report facts which are there in the books of account. Okay. So the question comes is whether we are required to maintain separate books of account as per the Income Tax Act. Usually it is not required. Because your single set of books of accounts, so appropriate serves desired purpose for both of the categories, income tax also and your normal accounting standard based reporting that is also there. That is financial reporting. Now coming to clause 21. Clause 21 talks about please furnish the details of amount debited to profit and loss account being in nature of capital, personal, advertisement, expenditure, etc. So we have various category, which is capital, personal. Okay, we have advertisement, expenditure in any souvenir, brochure, tract, pamphlet, or like published by a political party. Expenditure incurred at clubs being entrance fees and subscriptions. Expenditure incurred at clubs being the cost for the club service and facility used. Then we have expenditure by way of penalty, fine for violation. Okay, for any law for time being in force. Expenditure by way of any other penalty or fine not covered above. And we have expenditure incurred for any purpose which is an offense or which is prohibited by law. So various amounts debited to profit and loss account, that is clause 21A. Amount debited to P&L, which includes capital nature, personal capital expenditure, personal expenditure, advertisement. I'll just write summary over here. Capital expenditure, personal expenditure, advertisement with political party. Okay, membership fees, amount spent for the clubs, facility used at the clubs. Okay, then you have a penalty violation. Then you have other penalties. Okay. Now, capital expenditure is generally not allowable while computing the business income unless specific sections are there. Okay. So the details of any capital expenditure, if any debited profit and loss account, should be specified separately. Okay. That is pretty simple. Personal expenditure, again, they are not allowed as a part of deduction. Okay. So if they are debited to profit and loss account, then you need to report the same, and they are not allowable under section 37. Now, there is one specific section under Companies Act also, which is section 143(1)(e), which talks about that if it places the requirement on the auditor to inquire whether or if any personal expenses have been charged to the revenue account. Okay. So similarly, we have requirement under section 143(1)(e) of Companies Act. Okay. So if you are doing an audit of a company, okay, tax audit of a company, if so, you can refer to the work which is done for one section 143(1)(e) of the Companies Act. Now, section 37(2)(b) provides that no allowance shall be made in respect of expenditure by way of advertisement in any several brochure, tract, pamphlet, or the like published by the political party. Therefore, this kind of expenditure is also required to be reported separately. Again, that comes from the requirement of section 37(2)(b). Again, but there are certain provisions under section 80 GGB and GGC which allow deduction in respect of contribution made by the corporate and non-corporate assessee respectively to the political parties. And that is again required to be reported separately in clause 33 of Form 3CD. So I'm not talking about that contribution, but this is expenditure in the way of advertisement. Okay. Then you have a memberships that are required to be reported. Then you have a penalty or fines, that is required to be reported. Now, with respect to penalty or fine, which penalty or fine are required to be reported over here? So when I talk about penalty, fine, or violation, okay, this includes for all the laws which are time being enforced. For any or any law. Time being enforced. That's why I need to check the payments which are made by the assessee. Are any such payments which are for the penalty or fines? Okay. Then there are penalty or other penalty or fines which are not covered, which are not form part of the law. Okay. So for example, in clause this one, where in subclause where we are talking about penalty or violation based on any other law. But subsequent to that, there is another subclause which talks about other penalties, which is not covered above. Okay. So if you see over here, it talks about expenditure incurred for any purpose which is an offense or which is prohibited by law. Or if you see over here, expenditure by way of other penalty or fine not covered above means not based on law, but can be based on a contract. So penalty or fine paid at the time of breach of a contract. Okay. So this is kind of a compensatory in the nature when there is a breach of a contract or agreement. or any other condition, of contract is there, or something of similar nature, that will be covered in this particular section, because it says that not covered above. So for any law, it is in this particular area or in this particular section, law related penalties and violations. But penalties or fines which are not related to the law but based on the contracts, agreements, or such scenarios will be covered over here. Okay. Now coming to a point where we need to understand whether penalty, violation, fine is similar to the interest that is paid. See, we are talking about penalty, violation, or fine, or okay, penalties or fines. These does not include interest. So interest paid on delayed payment, interest paid to MSME is not a penalty or violation or fine. Okay, it is not required to be reported here. So payment of interest, not to be reported here. Clear? Any doubt with respect to clause 21A? Yes, correct, Mancha. Personal expenditures are not allowed as per section 37. Again, when we are referring or we are reporting amounts under clause 21A, we are not reporting the allowability or disallowability. We are just stating the fact. Okay, we are not referring to the allowability or disallowability or issuing any opinion on that area. We are just disclosing the facts and the detail with respect to the personal expenditure, capital expenditure, or any other item that is here. Any doubt, guys? Any doubt? No? No doubts? If no further doubts, then let's take a quick 10-minute break, and after the break, we'll gather back and continue the session. Okay, let's take a quick 10-minute break. अशोक जी, अच्छा सर सुनिए ना, session. So we discussed about clause 21A. Okay. Namrata, with respect to your query, whether interest allowable as a deduction that depends upon the nature of interest being paid. If it is related to the MSME, okay, then again, we need to see with respect to the different clause which is there with respect to the MSME. That is clause number 22 that I'm going to discuss in a while. Okay. So we need to check from that point of view and the relevant sections with respect to the Income Tax Act on the deductions being allowed for the amount any paid under the MSME Act. Okay. Now, and as you know, there is a new amendment with respect to Section 43B, a clause H that is inserted with effect from AY 24-25 to provide that any sum payable by the assessee to the MSME beyond the time limit specified in Section 15 of the MSME Act shall be allowed as a deduction only on actual payment. Okay. So again, we need to refer to various sections of the Income Tax Act with respect to the amount of interest that is being paid and the nature of such interest. Okay. Now, the next clause that I want to discuss is amount inadmissible under Section 40A as a payment to non-resident referred in subclause 1, where we have to provide this details of payment on which tax is not deducted. So date of payment, amount of payment, nature of payment, and name and address of pay. So to verify these details, basically, okay, to verify these details, we need to make sure that we are, referring to the amount that is paid to a non-resident. So if any details being maintained by the assessee with respect to the payments that are made to the non-residents, then we are required to verify that particular those particular records, okay, on which the tax is not deducted. Okay, and if we talk about the relevant section, that is Section 40A1, which talks about 100% disallowance attracted with respect to the sum paid or payable to a non-resident. Okay, and if I talk about Section 40A1 or IA, 30% disallowance attracted with respect to the sum paid or payable to a resident payee on tax is deductible at source, and such tax has not been deducted or after deduction has not been paid before the due date of furnishing return under Section 139(1). Okay. So as a result, as an auditor, tax auditor, we are required to report of details on which the tax is not deducted. So B also has various parts. B1 talks about details of payment on which tax is not deducted. 1A. Okay. B1A. Payment on which tax has not been deducted. You need to refer to Section 40A1. Over there, you need to verify are any such payments. So when we will perform audit, we need to check are there any payments to non-resident, and from TDS records, we can verify whether tax has been deducted or not. The next clause, B part of this, talks about Details of payment on which tax has been deducted but not been paid during the previous year or in the subsequent year before the expiry of time limits prescribed under section 201. So, details of payment on which tax has been deducted but not paid. So, A was tax which has not been deducted. B is deducted but not paid. Tax deducted but not paid. Again, you can verify from the TDS records, TDS returns, okay, whether any such amount exists or not. Then comes over here also, you need to provide the date of payment, amount of payment, nature of payment, name and address of the payee, and amount of tax deducted. Here, see, this is the additional point compared to A. Because in A, we are saying which tax is not deducted on which. But in B, I'm saying tax deducted but not deposited. Now, second is our clause B2, okay, which talks about payment referred into subclause IA, means IA of section 40A IA, okay, and in accordance with details of payment on which tax is not deducted. Can anyone tell me what is section 40A IA? Section 40A IA. So section 40 subsection A and clause IA. So basically this talks about sum payable to resident, and the deduction is or disallowance is 30% of such sum. Okay, where tax is deductible under chapter 17B and such tax has been not been deducted, or after deduction has not been paid before or before the due date specified under section 139(1). Okay, and when such tax is paid after deduction, then such 30% will be allowed as a deduction in computing the income. So first we need to provide amount on which tax is not deducted. So date of payment, amount of payment, nature of payment, name and address of the payee. Then comes details of payment on which tax has been deducted but not deposited before the specified date. Okay, and you have these additional points: that amount of tax deducted but not deposited, and amount out of 5 deposited, if any, if partial amount deposited. Okay, so this particular clause talks about payment made to resident on which the tax was supposed to be deducted. Payment specified under section 40A IA. Okay. Now in part A, we are talking about on which tax has not been deducted. Okay. And when I talk about B, I'm talking about tax not deposited. Okay. Same in this line also, we need to check for the TDS records and the payment made to the residents. Okay. Over here, we need to check payment made to the residents and TDS records. Okay. Then we have clause 3, which refers to the payments and inadmissible under section 40A IC. Okay, under subclause IC. Now, what is IC basically? IC talks about your any sum paid on account of fringe benefit tax, if applicable. That's why where applicable. Okay. Then under subclause 2A, okay, that is on paid on account of wealth tax. Then 2B, that talks about any amount paid by way of royalty, license fees, service fees, privilege fees, service charge, okay, by whatever name called, okay, which is appropriated directly or indirectly from a state government undertaking by state government. So I will write royalty or license fee. Okay. Then subclause 3, which talks about payment which is chargeable under the head of salaries if payable outside India or to a non-resident. Payment of salaries outside India or to non-resident. So over there, date of amount of payment, name and address of the payee is required to be specified over here. Under subclause 4, which talks about payment, any payment to provident for or other fund for the benefit of employees of the assessee, unless the assessee had made effective arrangement to secure that the tax shall be deducted at source from payments made from the fund which are chargeable to tax under the head of salaries. So I'll write it payment to funds. And subclause 5 talks about any tax actually paid by employer under clause 10cc of section 10. Okay. So section 10, 10cc, okay, tax payment. If that is the case, then that particular amount will be reported here. So from 3 to your 7, 3, 4, 5, 6, 7, 8. Sorry, 8. These are the various subclauses of section 40A. Okay. Payments in admissible under subclause or under clause basically. I'm still under clause IC 2 or 1C, 2A, 2B, 3, Okay. Then 4, 5, and 5 of section 48. And based on the payment type, nature of evidence is required to be obtained. Again, the question comes is, are we the person who are required to, comment on the amount not deductible? No. Here we are not required to comment on the amount not deductible, but if there is any inadmissible amount, we need to just report that fact. We are not the one to decide the deduction or not to be deducted. Okay. So that was clause, we were talking about 21B, that was the whole B clause. Now we will be talking about 21C. That is amount debited to profit and loss account being interest, salary, bonus, commission, or remuneration inadmissible under section 40B, 40BA, and computation thereof. So basically, these are the amounts which are, inadmissible under section 40B and 40BA, okay, of the Income Tax Act. Basically, if I talk about these amount, these are the limits laid down in these sections for the salary, bonus, or commission. Okay. Now, if there is any amount inadmissible as a remuneration, salary, bonus, commission under section 40B, then that is required to be reported. And here, with respect to that, the computation is required to be made based on the agreement, instrument, partnership deed, whatever it is available. 40B4 talks about any payment of interest to any partner, okay, which is authorized by or in accordance with the terms of partnership deed. Okay. And if any payment is of amount made in exceeding the the amount which is authorized by the deed, then that amount will be basically not admissible as a deduction under section 40B4. Okay. 40BA basically lays down that any interest or remuneration paid by an AOP to its members, okay, shall not be allowed as a deduction to the AOP. So accordingly, if any payments are made under section 40B, 40BA with respect to interest, salary, okay, remuneration, then based on the relevant section, we need to perform the recomputation and we need to check whether any amount is there on. So there are two things. One, which is the amount debited, and second, the same is inadmissible. These are the two things we need to focus here. Inadmissible and amount debited to P&L. So we are not required to report the total amount. We are only required to report the inadmissible portion of the amount paid. That is 21C. Amount inadmissible okay, and debited to P&L. Over here, only amount inadmissible is required to be reported. Okay, not the total amount paid as salary, remuneration, or interest. Okay, so we are only required to report, okay, the amount inadmissible, not the total amount, and that should be debited to profit and loss account plus debited to P&L. If the amount is not debited to profit and loss account, we will not report here. Then we have clause 21D. Clause 21D basically talks about disallowance under section 40A3, that is deemed income deemed income under section 40A3A. Okay. Disallowance under section 40A3 and 40A3A. Okay. So disallowance would be made if the payment or aggregate payments exceeding 10,000 or 35,000 in case of flying, hiring, or leasing of carriage goods, goods carriage is made to a person in a day. Okay. So I'll just write it for your reference. Payment in excess of rupees 10,000 bracket 35,000. Okay. To a person per day, otherwise than by an account pay check. I usually write this through cash. Okay. For ease, I write through cash. Okay. And if there are certain circumstances under Rule 6 DD, in that case, it will not be disallowed. But usually, if the cases are not as per the Rule 6 DD, then the amount will be disallowed if paid exceeding 10,000, 35,000, okay, to a person in a day. So for that particular purpose, you need to verify amounts paid, okay, to a person in a day through cash, okay, and you need to refer to cash book or ledger to identify such amounts. Now, it is to a person in a day. It can be multiple transactions to a person in a day. So all cash payments in respect of expenditure exceeding the prescribed limit are required to be covered over here. Okay. And accordingly, we need to verify special cases as per Rule 6 DD. Because here, what we are required to report is the amount that is disallowance, amount of disallowance or deemed income under this particular section. Okay. So if you see here, on the basis of examination of the books of accounts and other relevant documents and evidence, whether the expenditure covered by 40A3 read with Rule 6 DD were made by account payee check or drawn on a bank account payee draft. If not, then furnish the details. What are the details? Date of payment, nature of payment, amount, and name and permanent account number, that is PAN and Aadhaar of the payee. Same way you have for 40A3. Okay. If it is not paid through payee check drawn on bank or account payee check, then details of amount deemed to be profit and gains of business and profession, for that date of payment, nature of payment, amount, and PAN and Aadhaar of the payee if available. Practically, it is not possible to verify each payment reflected in the bank statement as to whether the payments have been made through account payee check, demand draft, or using electronic clearing system to the bank account, or such other mode as may be prescribed. Thus, it is required that auditors should obtain certification or written representation from the assessor Considering the nature and the volume of the transaction, it is not possible for the tax auditor to verify whether all such payments are being made through account pay check or not. So, certificate slash written representation should be obtained from assessee. Okay. Plus, plus, we are required to report. See, again, here we cannot verify everything. So, basically, you should report or you should comment as a tax auditor in your report. Let's say, for example, if you don't have the data, if the reporting is, that much data is not available, that much information is not available. In that case, you can add one particular comment in your tax audit report with respect to such, data not being available, or a comment that it was not possible for us or me to verify whether the payments in excess of 10,000 has been made by the account pay check or bank draft or prescribed electronic mode, as necessary evidence is not available in possession of the assessee. So, a note when necessary evidence is not available. Kind of a disclaimer note, I would say, okay, that it is not possible for us to verify. The way we do a disclaimer of opinion, a disclaimer note that we were not able to verify because the necessary evidence was not available. Okay. Then the next clause that is there is clause 21E, which is with respect to the provision for payment of gratuity. Okay, which is not allowable under section 40A7. If such provision is there, then no deduction is required to be allowed in that particular provision. Basically, the deduction is only allowed in relation to such provision when payment of a sum by way of contribution to the approved graduation fund is, done in the previous year. Now, as the auditor, tax auditor, we should call for the order of the principal commissioner of income tax or commissioner of income tax granting approval to the gratuity fund. And we need to verify the date from which it is effective. Also, we need to verify whether the provision has been made as a provided in the trust deed or not. Okay. Then only we can say, okay, the payment that is made can be allowable or not. So, provision for payment of gratuity not allowable. In order to that, we need to verify two things. One, order by principal commissioner of income tax, okay, or commissioner of income tax granting approval to the gratuity fund. Okay, and the date when it is become effective. Also, we need to verify whether provision has been made as provided in the trust deed. So, provision made versus specified in trust deed. Then we have clause 21F. Okay, that talks about any sum payable or paid, sorry, rather any sum paid, okay, by the assessee as an employer not allowable under section 49A. So any sum paid not allowable under section 40A(9). Okay. Now what is that? That is payment made by an employer towards setting up or formation of or as a contribution to any fund, trust, company, association of person, body of individuals, okay, or other institutions which is not allowable. Now, in this case, is any such sum being paid? If yes, then the as a part of the audit, what we are required to do? Documents we need to verify, okay, with respect to factual nature of expense. Sometimes these expenses are reported in a disguised way. Okay. For example, if I pay any sum, I may charge or I may classify as a professional fees. I may classify as a legal fees. So I need to check the documents to identify the factual nature of such expense incurred and debit it to P&L account. Okay. In order to determine whether this is disallowable or not, I need to check for the relevant document, deeds, working papers, which is required in this scenario. So accordingly, I need to check for amount debited to P&L, okay, with different nature than what actual nature it is. That is 21F. Any sum paid by assessee as an employer not allowable under section 49A. Then we have particulars of any liability of a contingent nature. Okay. If there is any liability of the contingent nature being debited to the profit and loss account. Now, why debited to the profit and loss account? Because if you see the clause 21, the clause 21 talks about furnish the details of amount debited to profit and loss account. So the whole clause talks about these amounts being debited to P&L. Okay. So if in relation to that only, if there is any liability of contingent nature which is debited to profit and loss account, then such detail is required to be provided here. Liability of contingent nature debited to P&L account. So here we are required to check for the amounts that are debited to P&L account being of contingent nature. Okay. Now for that we need to conduct a detailed scrutiny of the amount being debited. Detailed review of amounts debited in order to identify such amounts. Okay. But it may happen because of such number of transactions, it may not be possible for auditor to report or to verify all the debits to the P&L. In that case, a note to specify that auditor has verified on text checks basis. basis is required to be included when you perform test check, because at the end we are required to give true and correct information, not the true and fair. So true and fair, for that, okay, sample testing is fine, but for true and correct, we need to verify everything. But when we are not able to verify everything because of the limitations, because of the the number of transactions or evidence being not available, at that point in time, we need to specify in the notes. Okay, we need to specify separately that okay, this is a scenario, and because of this reason, we are not able to verify everything. Now, another point here is that amount reported as contingent liability in notes to account. Okay, amount reported as contingent liability in notes to account is not required to be reported here. Okay, this particular amount is not required to be reported. No. Reason because we have to report the amounts which are debited to the P&L, not which are shown in the notes to account. So if there is any amount which is reported in the notes to account, that is irrelevant for me. And the last part with respect to clause 22 is with respect to two clauses. Sorry, there are two clauses more. One, amount of deduction inadmissible under section 14A in respect of income expenditure incurred in relation to income which do not form part of total income, and amount inadmissible under the proviso to the section 3613. Okay, 3613, that is amount of interest paid in respect of capital borrowed for the purpose of business and profession, would be allowed at deduction in computing from income, basically referred into section 28. But the proviso says that any amount of interest paid in respect of a capital borrowed for acquisition of an asset for any period beginning from the date on which such capital was borrowed for acquisition, okay, till uh, the the date on which such asset was put to use shall not be allowed as a deduction. So that is interest from date of borrowing to date of put to use of asset. That is not allowed. Okay. So these are the two one that makes the clause 21 very big and complete. H and clause 21I, that is amount disallowed under section 14A and amount disallowed under section 3613. Okay. And accordingly, we need to verify the things. Any doubt with respect to the whole clause 21, what we discussed? Clause 21, starting from here, debited to P&L account, all items relevant to the debited to the P&L account. Now, so the question is, FBT, wealth tax are already abolished. So that's why, if you see, it's written wherever applicable. Not in all the cases, but wherever applicable, it was written. Over here, wherever applicable. So whether tax auditor is required to follow code of ethics? Yes, he is required to follow code of ethics. There is no exemption in that. So that was clause 21 with respect to various amounts being debited to P&L account. Any doubt? Okay. If no doubt, then let's proceed further because we have to cover a lot of clauses. So from 22 to 25, they are pretty straightforward with respect to the clause which are there. So 22 talks about amount of interest inadmissible. Amount of interest inadmissible under section 23 of MSME Act. Okay. Now MSME Act basically, states that the amount of interest which is inadmissible is, with respect to delayed payment. Okay. Interest paid or payable by a buyer. Okay. Under this particular act. Okay. Under section 23 is disallowed. Okay. It is not allowed as a deduction. And this is basically when, buyer is not able to make payment or fails to make payment of the amount to the supplier, being MSME. Okay, that is required under section 15 of MSME Act. Now, in that case, buyer is required to pay compound interest with monthly rest to the supplier on that amount from the appointed date. Okay, and that particular amount is not allowed as a deduction. So, for this purpose, we need to identify any such amount being paid to the buyer. First of all, we need to identify which are the buyers, which are MSME in the MSME buyers. Clause 22. So, amount of interest to MSME. Okay, that is not allowed basically in admissible. Now, for that amount, what we are required to do is we need to, as a tax auditor, seek information regarding the status of the enterprise first. Status of enterprise is required to be inquired first. Okay. Then you may also have disclosures made in the financial statement. You can cross verify. In financial statement under section 22 of MSME Act. Okay. Then you need to identify full list of suppliers of the assessee which fall under the purview of MSME Act. Okay. Once you obtain that list, you need to verify with respect to delayed payments made to such suppliers. Then you need to verify payment of interest to such MSMEs. Okay. And accordingly, you need to decide whether this amount becomes inadmissible or not. So, no deduction would be allowed in respect of such interest. Okay. Even if such sum is actually paid by an assessee. That was clause 22. Clause 23 talks about particulars of payment made to persons specified under 40A2B. Now, 40A2B basically is a power of assessing officer to fix the quantum of disallowance. Okay. Now, under this clause, the particulars of payment to be stated made to the person covered under 40A2B. So here I am required to disclose the payments. Okay. Disclose. Sorry. Here I'm required to disclose the payments which are made to persons specified under that particular section. Made to specified person under section 40A to B. Okay. So here, if I talk about from the point of audit, we need to first understand or obtain list of specified person. Now the specified person can be, are specified in that particular section. So you need to obtain the list of specified person. Then you need to check payments made to specified person. Okay. Now, one thing is required to be understood over here is that we are not here to report with respect to the disallowance. We are not reporting on the disallowance. We are just reporting the payments which are made to the person covered under this particular section. So we are not, reporting anything on the disallowance. No reporting on disallowance is there. It's with respect to only payment made to specified person. And if it is not possible for the assessee, tax auditor, okay, because of the missing details, voluminous list, or a lot of limitations with respect to the checking all the transactions, then appropriate disclosure is required to be made. Clause 24. Okay. Clause, this is with respect to amount deemed to be profit and gains under section 32 AC, 32 AD, AB, ABA, or AC. Basically, these are, deduction in respect of tea development account, coffee development account, rubber development account. 33 ABA is a site restoration fund. Okay. Now, in certain cases, these deductions are, classified as a deemed income. So when I talk about profit and gains, so we are talking about deemed income. So for these deemed incomes, we are required to verify whether any deduction was earlier allowed now because of certain conditions and circumstances, whether these deemed incomes are required to be recognized. Okay. So we need to verify first whether any deduction was taken. Second, whether the conditions are complied which are there in these sections, and accordingly we need to report upon the amount deemed to be profit and gains. We have section clause 25, that is any amount of P&L chargeable to tax under section 41 in computation thereof. So what is section 41? Okay. Any amount of profit chargeable to tax under section 41. Basically, if you talk about section 41, okay, here we are required to report those amounts that that are chargeable to tax. Just a minute. There are various subsections under section 41 which talks about expenditure on in loss, expenditure, trading liability uh, incurred by the assessee or subsequently during any previous year, then you know which is respect to the then building machinery or plant or furniture. Okay, then you have various different subsections in section 41. If any amount is chargeable to tax under section 41, then you need to provide the computation thereof. Now, for this purpose, we need to actually, go through subsection wise what are the amounts and if any such transaction is falling under the purview of section 41. Now, here we are talking about amount chargeable to tax. So, under clause 25, that is amount chargeable to tax under section 41. Here we are not concerned with amount being debited or credited or to the profit and loss account. It is not necessary that the amount should be credited for the purpose of section 41. Okay. So the fact that the amount was credited to the P&L or not is irrelevant over here. So accordingly, subsection wise, we need to verify whether the amounts are required to be considered as chargeable under chargeable to tax under section 41 or not. So credit to the profit and loss account is not relevant. Second, we need to provide computation also. So computation of amount is required to be given. When I talk about computation, I need to provide under this subsection what was the amount, how much amount is chargeable to tax, why that much amount only. So detailed computation is required to be given. That was clause 25. Clause 26, very important one. Okay, which talks about in respect of any sum referred in clause A, B, C, D, E, F, G of section 43B, the liability for which now either was pre-existing on the first day of the previous year, but was not allowed in the assessment year, assessment of any preceding previous year, and was paid during the previous year and not paid during the previous year. Means the liability was there with respect to the clause A, B, C, D, E, F, G of section 43B, and it was not allowed in previous or preceding previous year, but was paid during the previous year, and let's say for example certain amount not paid during the previous year. So clause 26A, we are required to report basically liability existed. Okay, now out of this liability there could be two portions. One paid during the year, and this is the opening balance. If you minus out this particular portion, you will get not paid during the year, and that is required to be reported over here. That is paid during the year and not paid during the year. So this is nothing but opening balance minus paid during the year. And B talks about incurred in the previous year and was paid on or before the due date of furnishing return of income of the previous year. Okay, means it was incurred in the previous year, okay, and was paid also. And the next part is not paid on the before due date. So there are two portions here also. One incurred in previous year, out of which one will be paid, okay, and the remaining portion will be not paid. Okay. Now this not paid and this not paid will become again in the next year pre-existed, okay, as per clause A, or basically sub clause A. And if I talk about over here, this one not paid and this one not paid, in next year this will form part of here pre-existed on the first day, and again the cycle will start, paid or not paid, paid or not paid, like this way. Now here we need to verify with respect to the liabilities, how much amount paid, how much amount not paid from the bank statements. Okay. With respect to the details and everything, we need to verify from there. Then clause 27 talks about amount of SANVET credit availed or utilized during the previous year and its treatment in the profit and loss account and treatment of outstanding SANVET credits in the account. Now here when we are referring SANVET credit, we are referring to SANVET credit and GST availed and utilized should be reported. So this is including GST credit. In some cases, SANVET or GST credit availed may be lesser than the SANVET or GST credit utilized during the year on the account of opening balance. Okay, or vice versa, there could be both scenarios. So we need to report accordingly. Accounting treatment wise, if we are required to report, that is, whether we have taken that particular amount which is utilized through P&L or not. And accordingly, we need to report that amount in the format which is there in the utility, e-filing utility. Then particulars of income or expenditure of prior period credited to credited or debited to profit and loss account. So prior period items basically. With that are required to be reported over here. Then clause 28 talks about whether during any previous year the assessee has received any property being share of company, not being a company in which public are substantially interested without consideration or for inadequate consideration as referred in section 56(2)(7)(a). And if yes, then furnish the details of the same. That is when 56(2)(a) talks about that just a minute. 56(2)(a) talks about basically if you have received shares of the company, not being a company in which public is substantially interested without consideration or for inadequate consideration. Now, when we talk about 56(2)(b), that is at clause number 29. Okay, it talks about during the previous year, assessee received any consideration for issue of share which exceed the fair market value of the shares. Okay, so both are different, and accordingly, the details are required to be reported in either 28 or 29. But if I talk about clause 28 or section 56(2)(7)(a), basically. Now, this particular section talks about on or after June 2010, but before April 17. So if you refer that section, it talks about the period that is June 10 and before April 17. So that's why in most of the cases this is not applicable. Before uh, April 2017, okay, if any such transaction was there, then that was required to be reported over here. That's why this is not that much relevant as of now. When I talk about clause 29, it talks about whether during the previous year assessee has received any consideration for issue of shares which exceed the fair market value of the shares, referred in section 52 56 to 7b. Okay, and if yes, then we need to provide the details for the same. So as a tax auditor, we are required to check whether during the previous year the assessee received any consideration for issue of shares which exceed the fair market value. Now this is applicable to the companies where public are not substantially interested, and accordingly we need to report in this clause. Basically, usually what we do is we obtain the report or valuation report from a certified valuer to assess whether it is exceeding the fair market value or not. So as a part of audit, you obtain valuation report and then you compare with that. Section clause 29A. Now clause 29A talks about basically amount to be included as an income chargeable under the head from IFOS under clause 9 subsection 2 of 56. Okay. That is basically money, a sum of money received as an advance or otherwise in the course of negotiation of a transfer of a capital asset, and subsequently that money is forfeited and negotiation do not result in any transfer. So forfeited money for transfer of capital asset. Okay. You need to provide the nature of, you need to provide the details over here. Yes or no. If yes, then you need to provide the nature of income and amount thereof. Same way we need to provide in with respect to amount chargeable to IFOS under clause 10 of subsection 2 of 56. Okay. Basically here the amount is if a person receives in any previous year from any person money, immovable property or other property, okay, and the conditions which are there in that particular sections get satisfied, then this particular section will get triggered. Okay, and income is required to be charged under section IFOS. If that is the case, then you are required to provide the details, nature of income and amount thereof. Accordingly, we need to verify in both of the cases amount received, okay, by the assessee. Basically, in this case, it will be shown as an advance received, and it may not be transferred to the profit and loss account. So, being carried through profit and loss account may not be there. Okay, so you need to accordingly verify whether the amount was there as an advance, later forfeited, may be adjusted to the cost of the capital asset, or may be taken to the profit and loss account. Accordingly, you need to check whether what was the treatment was given, and irrespective whether the amount was taken to the P&L or not, we need to identify and verify such amounts. So that was 29B and 29A. Then we have a 30, clause 30, which talks about Details of any amount borrowed on Hundi or amount thereon, okay, repaid otherwise through an account pay check. That is section 69D with respect to the amount borrowed on Hundi. Not much relevant because there are very few transactions with respect to this kind of nature. Then we have a 30A, whether primary adjustment to the transfer price as referred in subsection 1 of section 92 CE has been made during the year. Okay. And accordingly, details are required to be given. Okay. That is, if yes, then under which clause of subsection 1 amount, whether the excess money available with the associated enterprise required to be repatriated to the India as per the provisions of subsection 2 of 92 CE. If yes, whether the excess money has been repatriated. If no, then the amount of imputed interest income on such excess money, which has not been repatriated within the prescribed time. Basically, we obtain a certificate from the assessee with respect to these transfer pricing adjustment made during the previous year. And we check the records accordingly. Plus, if there are any transfer price auditing or any reporting has been done with respect to these transactions, then we can also verify from those reportings. Same way, we have clause 30B again with respect to the transfer pricing only. Transfer pricing adjustment, primary adjustment basically. So 38 talks about primary adjustment. Okay. 30B also your talks about primary adjustment. Or expenditure with respect to in excess of 1 CR basically. So whether assessee has incurred expenditure during previous year by way of interest or similar exceeding 1 CR under subsection 1 of 94B. If yes, then the amount of expenditure, earnings before interest, tax, depreciation, amount of expenditure by way of interest of similar nature, okay, exceeding 30% of the EBITDA, and detail of expenditure brought forward as per subsection 4 of 94B. Okay, and you need to provide details in this particular format in the utility also. So there are various conditions which are there in the CBDT circular with respect to 94B, with respect to 94B1, B2. We need to verify over here. Non-resident associated enterprise. 30C is with respect to avoidance agreement. Okay, impermissible avoidance agreements. So whether assessee has entered into impermissible avoidance agreement as I referred to 96 during the previous year. If yes, then the nature of impermissible avoidance agreement, amount of tax benefit in previous year arising in aggregate to all the parties to the arrangement, okay, is required to be reported over here. So, Pankaj, you can refer to the lecture where section 69D was detailedly discussed with respect to the Hundi transaction. Okay. Then very important sections I want to discuss is 31 series. Clause 31. Sorry. Very important clause that I want to discuss is clause 31 series. Okay. Reason because these clauses are kind of critical to understand with respect to various different 31A, B, C, D of nature. Just a minute. Hmm, just a minute. So clause 31 AB, from A to A, B, BB, BC, BD, then we have a C, D, E. I will summarize, okay, in a chart, in a format of a chart, and based on that, we will be able to understand how these clause work with respect to, different reporting requirement. Basically, when I talk about uh, clause 31, okay, it it is basically, revolves around section 269 SS, 269T, okay, and 269 269 ST. So all these things are covered under these clauses, 31 A to uh, D. So I'll summarize over here. Clause 31 fully. When I talk about 31A, I talk about loan or deposit taken or accepted in excess of 20,000. Okay, I'll just provide a summary first. Loan or deposit, okay, taken or accepted excess of rupees 20,000. When I talk about B, okay, now here I'm talking about loan or deposit as per 269 SS. When I talk about B, 31B, I'm talking about again 269 SS but specified sum, okay, with respect to transfer of immovable property. Accepted or taken in excess of 20,000. Now, again, specified sum with respect to the limit of 269 SS. So the limit is coming from 269 SS. Now comes to the next clause, which is BA. Now, BA talks about any receipt. Okay. Any receipt in an amount exceeding the limit specified under 269 ST. So the limit is 2 lakh or more, which is in ST. Okay, in respect of in a day, or in respect of a single transaction, or in respect of transaction relating to one event or occasion during the previous year where such receipt is otherwise done by a check, bank draft, or electronic clearing system, or through bank. I usually call it as a cash. So in cash, that is BA. So the limit is coming from 269 ST. Then comes the next clause, which is BB, 31BB. 31BB talks about any receipt. Again, the limit comes from the 269 ST, that is 2 lakh or more. Okay. Now, this is received by any receipt. Okay. I'm talking about receipt here. Received by check, bank draft, not being account pay check or bank draft during previous year. So BA was talking about particulars of each receipt. Okay. During previous year where such receipt was in cash, basically. Okay. Now here receipt can be in capital or revenue both in excess of 2 lakhs. Otherwise buy-in check or bank draft. But when I talk about BB, it is talking about check or bank draft not being account payable check or bank draft. Okay. So here check or bank draft, but not account payable. I call this term as a deemed cash because it's a bearer check. Okay. It's not accounts payable, but it's a bearer check. So that is BB. Now that was with respect to the specified sum, loan or deposit taken or accepted. Okay. I'm getting the amounts in all the cases A, B, 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 A, B, B. So loan accepted or kind of taken, that is A, B, or B, A, B, B. Now, when I talk from 31 BC, I talk each payment. Now I'm coming to the payments. Each payment amount exceeding the limit specified under 269 ST. Now again, the limit of 269 ST is 2 CR or 2 lakh rupees. Okay, the limit is coming from ST. Otherwise, by an check, bank draft, electronic clearing system, which is cash. I call it as a cash. Then comes the BD, clause BD. Here we are required to provide details of each payment. In excess of limit of 269 ST, which is 2 CR or more, or 2 lakh or more. So limit is coming from 269 ST. Only limit is coming from 269 ST. Okay. And here it is deemed cash or bearer check kind of. Which is this one. Okay. Check or bank draft, not account payable check or bank draft. Now it comes to the next clause, that is C, 31C. Here I'm talking about again repayment of loan or deposit or specified advance. Specified advance again with respect to transfer of immovable property. Now the limit here is exceeding 20,000. So the limit is coming from section 269T, which is made during the year. Particulars of each loan repayment, deposit repayment, or specified advance repayment. Then comes D. Okay. It is with respect to again repayment received. Now here I am talking about repayment received. Remember, repayment received by assessee. Okay. Repayment received by assessee for amount more than 20,000. Again, the limit is coming from 269T in cash. And when I talk about clause E, again, repayment received with amount more than 20,000, that is coming from 269T in bearer check. Okay, that is not an account payable check or bank draft. that is covered under 231E. So this is the summary of clause 31. A, B, BA, BB, BC, BD, C, D, and E. And if I summarize, (31) A, B, and C, they talk about loan and loan, which is acceptance plus repayment. When I talk about 31 BA, BB, BC, and BD, they talk about any receipt. Okay, which is or any payment. And when I talk about 31 D and E, I am talking about repayment received. So if any such transactions are there which exceed the limits which are given, okay, transaction with respect to loan or deposit accepted in excess of 20,000, transaction with respect to specified sum exceeding 20,000, any receipt exceeding 2 lakh rupees in cash or bearer check, okay, then these are required to be reported in relevant clauses with specified details. If you see the details which are given, name, address, permanent account number, Aadhaar number of lender or depositor in cases when the specified sum is received. So it will become from the person from whom specified sum is received, amount of loan or deposit taken or accepted, whether the amount of loan or was squared up during the year. That means whether the loan was made zero, means I have each loan and deposit, okay, accepted or taken. I taken the loan during the year, but all the loan was paid during the year. So squared up. Maximum amount outstanding in account at any time during the previous year. So in account of loan, okay, this amount outstanding in account means this account here we are referring to loan account. And whether the loan was accepted or deposit taken accepted by check or bank draft or use of electronic clearing system. Okay. And in case of loan or deposit were taken by check or bank draft, whether the same was accepted by account payable, account payee, check or bank draft or not. So same way, each clause requires a detailed reporting with respect to these transactions. For example, BC, here you are required to provide the detail of each payment in exceeding the limit of 269 ST, which is 2 lakh rupees. So over there, name and address of the payee, because you are paying the amount. Okay, so to whom you are paying, the payee, nature of the transaction, amount of payment, date of payment. In case of E, we are talking about repayment of loan with respect to 269T, limit 269T, which is 20,000. So name and address of the payer who is paying to us, repayment of loan or deposit or specified advance, whether received by a check or bank draft, which is not an account pay check or bank draft. Okay, and accordingly, we need to report the relevant details in these clauses. Repayment of loan or advance or specified amount. Repayment received, that I have received the amount. Any doubt? So Pankaj, I will suggest if you can, refer with respect to the impermissible avoidance agreement or the relevant, lecture on that particular topic. Okay, because in detail we explained over there what is impermissible avoidance agreement and how, other conditions work. Then section 32, that was clause 31. Clause 32 basically talks about detail of brought forward losses or depreciation allowances, okay, in this particular manner. So it is basically on brought forward losses, depreciation allowance. Okay. So all losses allowance not allowed under section 115 BAC, 115 BAD or BAD. Amount as adjusted by the withdrawal of additional depreciation. Amount as assessed, amount then assessed in the remarks. Then you need to provide in 32B whether any change in shareholding of the company has taken place in the previous year due to which losses incurred incurred prior to the previous year cannot be allowed. Means if any loss was there which was supposed to be carried forwarded, but now we cannot carry forward because there is a change in the shareholding, and that loss, okay, incurred in the previous year cannot be allowed to be carry forwarded because of change in the shareholding under section 79. And 32C talks about speculation loss referred in section 73. So that is 32, brought forward losses. Now these things you can verify from the income tax return, okay, of previous years, preceding previous years, okay. You can verify from books of accounts. So from there you can identify, is there any loss that is required to be brought forwarded or depreciation allowance? Is there any thing which is cannot be allowed because of the change in shareholding? Now change in shareholding will happen in current year, and for that you can check for MCA records. Okay. And accordingly, you need to check for the conditions which are there in section 79. D talks about any loss referred in section 73A, okay, of any specified business during the year, then you are required to provide the details for the same. So this talks about loss referred under section 73A with respect to the specified business only. And 32E talks about whether the company is deemed to be carrying on speculation business as referred in section 73. If yes, then speculation loss, if any, incurred in the previous year. Deemed to be carrying speculation business, okay, under section 73. Then you are required to provide a speculation loss incurred in any previous year, during the previous year. So that is 33, 32E. 33 basically is any amount of deduction admissible under chapter 6A or chapter 3. You need to provide section-wise deduction over here. So these are the list of deduction. Chapter 6A, chapter 3, that is section 10A, 10AA. If any deduction is there, which is assessee is claiming, then you need to provide it here. You need to obtain certificate from assessee for the amount which is being claimed by the assessee, okay, or you can obtain computation or income tax return to verify the same. Very important clause 34, which talks about amounts whether the assessee is required to deduct or collect tax as per the provisions of chapter 17B or 17BB. Okay, if yes, then details. Like for example, 10 number section under which the TDS was required to be deducted, nature of payment, total amount of payment or receipt of the nature of the payment which is made, total amount of payment, total amount on which tax was required to be deducted. Okay, there could be amount, let's say for example, this could be 100, which is payment made, and total amount on which tax was required to be deducted. Usually it is same, but in certain cases it can be different. Total amount on which tax was deducted. It could be, let's say, for example, I deducted less tax. So I deducted tax only on 80 rupees out of 100. Amount of tax, let's say 8. Amount of tax deducted or collected. Now, total amount of on which tax was deducted or collected as less than specified rate. So lower deduction case. Amount of tax deducted or collected on 8. This is one, the lower deduction amount. Okay. And amount of tax deducted or collected not deposited. Let's say, for example, out of 8, I only deposited 6. So 2 is not deposited, which will reported here. And accordingly, I need to furnish the details with respect to the statement of tax deducted or collected, which I filed with the income tax department. Okay. So due date of furnishing return, date on which I furnished the return. Okay. 10 number, type of form which was furnished. Okay. So all these details are required to be given under clause 34. Then under clause 34C, if any interest is required to be paid for the delayed payment of the TDS, then such detail is required to be provided here, which is under section 2011A and 206 C7. Okay, so interest on delayed payment. So 34 is basically about TDS and TCS, whereas 33 was about your 32 and 33 was deductions and 32 was brought forward losses. 35 is with respect to the details about the goods which you are trading in. So you need to provide quantitative details of the principal item of goods traded. Now here, the focus is required to be given on the term principal items, not all items. And this is in case of trading concern. You need to provide quantitative details with respect to opening stock, purchases, sales, closing stock, shortage, and excess. Now, when I say quantitative details, this is quantity we are asking, not amount. Okay, that is the quantitative details with respect to the principal items. Means principal items can be your, which comprises 90% or 80% of your goods traded. In case of a manufacturing concern, you are required to provide again quantitative details of principal item of raw material, finished goods, and byproduct. So again, the thing comes with the quantitative details of the principal item. Now here, unlike we had goods traded for the trading concern, we have raw material, finished products, and byproducts. We need to provide with respect to that raw materials, opening stock, purchase, consumption, sale, closing, yield of finished product out of the consumption of the raw material, percentage of yield, and shortage. Same way, we have opening stock, purchases, quantity manufactured, sales during the year, closing stock, and shortage. So this is again the quantitative details. Quantity, not amount. For that, you need to verify stock register, inventory records. Okay. You need to obtain these details from the assessee. And you need to verify these details quantity wise. Then 36A. Again, 36A is with respect to section 222E, deemed dividend. Okay. If assessee has received any amount in the nature of dividend, okay, then you need to provide the amount received and date of receipt. For that, you need to verify amount received by assessee, okay, where assessee has interest, amount received by the assessee from company where assessee is interested, that is deemed dividend. Clause 37 talks about cost audit. If the cost audit is there, then you need to provide the details of the cost audit that was carried out. Okay. Qualifications or disqualifications or disagreements on any matter, item, or quantity that was reported by the cost auditor, that is required to be reported over here. Then 38 is about central excise audit, and you need to provide again details of disqualification and issues identified by the auditor. 39 was the audit conducted under Section 72 of Finance Act, which was related to the service tax but now not relevant. So these both, again, not that much relevant as of now. 40 is regarding the turnover of the gross profit, net profit, stock in trade, and material consumed previous year and preceding previous year, comparative numbers. And this is required to be computed based on the principal items of good traded or manufactured. Okay, not for all, but principal items. You need to furnish principal item wise. Then 41 talks about your refund issued with respect to other laws other than income tax and wealth tax. If you have any refund for any other laws, any other tax laws, okay, that is required to be reported over here. Then clause 42 talks about whether assessee is required to furnish statement in form 61 or 61A or 61B. If yes, then the dates for the same. Now, what is 61A, 61, 61B? Now, this is based on rule 114D, 114C, okay, and 1142. Okay, this is annual information return or for the statement of financial transaction required to be furnished under section 285 BA1, okay, which is required to be furnished under form 61A. Then statement of reportable accounts under section 285 BA 1K, which is again required to be furnished by reporting financial institutions in respect of each account which has been identified pursuant to due diligence. Again, this is relevant or to only certain cases which are specified under, basically, if I'll mention section 285 BA 1 and rule 114B, 114C, and 1142. Okay, you need to provide details of those particular over here. Then whether the clause 43 talks about whether the assessee or its parent is an alternate reporting entity liable to furnish report under subsection 2 of section 286. Okay, again, that is very relevant, very specific case scenario. Okay, where section 286 to cast an obligation on the parent entity or the alternate reporting entity if the resident in India is required to furnish report in respect of international group to which it constitute part of that particular international group, and it is for the every accounting year within a period of 12 months from the end of such reporting accounting year. Okay, so it's basically with respect to the international group which is there. Okay, they are the reporting entities part. So you need to provide details of that over here. Whether the report has been furnished by the assessee, name of the parent, name of the alternate reporting entity, and date of the furnishing report. Now, the last clause and very important clause, that is breakup of the total expenditure of entities registered or not registered under GST. This clause required to provide the detail of expenditure in respect of entities registered under GST with further classification. Okay. For example, total amount of expenditure incurred during the year, in expenditure in respect of entity registered under GST relating to goods and service for exempt from GST, relating to entities falling under the composition scheme, relating to other registered entities, total payment made to registered entities, and then you have a expenditure relating to entities not registered under GST. Here we are required to provide total payment to the registered entities. Now here the term payment is used. Okay. Total expenditure incurred plus total expenditure of payment. Now, here we need to provide details with respect to expenditure incurred during the year, total amount of expenditure incurred, and then expenditure incurred with respect to the registered GS entities registered with the GST. Now, it is important here to differentiate the current status of the supplier registration from the status when they supplied services to us. There were instances, that several vendors, got their registration cancelled, or they were cancelled subsequent at the time of reporting under 3CD. But when we obtain the services, the status was something else. Okay. In that case, auditors are required to extend their cutoff dates, and they need to check whether the status of the vendor has changed or not, and accordingly we need to report what whether it was registered or not registered, or whether it is falling under the composite scheme, or is it under the category of exempt. Here the language used is expenditure in respect of. Okay, now the term expenditure is used. It can be capital, it can be every type of expenditure we need to consider. And accordingly, the details are required to be reported. Now, from where we will obtain this detail? These details can be obtained from GST records or GST returns. Okay. So from there, we can verify whether these details are correct or not. And that was the last clause for the form 3CD. In the end, you have name, full address, place, date. You need to provide FRN, membership, plus UDIN. So that was form 3CD. So basically, let's say, for example, if a registration status has changed after the year, that will not change the record over here. So this is based on date of expenditure, not on balance sheet date or signing date. So whatever registration status is there on date of expenditure, okay, that particular classification is required to be taken, not on balance sheet date or signing date. I hope I have answered your query, Namrata. Any doubt with respect to form 3CD, guys? Any doubt? you know. So guys, with this we have completed our chapter on tax audit and ethical compliance. Please read the chapter in detail. Okay, after this session, go through the chapter, and if you have any doubts at any point in time, you can reach out to the board of studies with the given mail IDs and the contact details, and you can ask your doubts. Okay, but please revise the chapter. That is very important for you. Okay guys, all the best for your exam. Thank you very much for the participating in the lecture. Okay, do well in exam. Thank you. Ashok ji.